Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again in the gold market. In today's weekly report, we have tried to take a look at the new fundamental background that we have. As you know, the gold has got the deadly hit from the news. Pfizer company has announced its vaccine has the efficiency of the 90% and it's almost ready for production. But more and more analysis and traders currently coming to thoughts that overall reaction euphoria or a bit overextended. So market overestimated the impact of this news on the market in general on the value of the gold. Why? Because if you will take a look in detail on the specification of this vaccine, you will see that it must be stored with minus 70 degrees on the Celsius, and Pfizer will be able to produce just 50-60 millions of the doses, which is a drop in the sea for not only for the world, but just even for the United States. From that standpoint, the more expected is the vaccine from the AstraZeneca company. That will cost 10-15 times cheaper, just about the $3 per dose. And they at least will be able to produce a few billions, 2 or 3 billions by the end of 2021. So that's at least something. There's also a Chinese company that is developing the vaccine, but as you know, the developed countries look to third countries' pills with the suspicions. That's why it's not highly accepted vaccines from the China, from the Russia, of course, and mostly they're focused on the domestic produced vaccines, which is actually logical and absolutely understandable. So from that standpoint, if we suggest that in Europe and Great Britain together with the United States are living just slightly more than the 1 billion people, it means the AstraZeneca company should provide sufficient number of doses. 3 billion should be enough because each person will need 2 injections. So it's a 2-step vaccine, and it means that's approximately 1 billion and 500 million people could be injected with this vaccine. So it should be enough for the Europe and for the United States, even there will be some residual. So it means that if they are really effective, as announced in the news, the problem of the pandemic, at least with the new infection, should be resolved somewhere closer to the end of 2021 and the beginning of 2022, where the effect of the vaccination will start to appear on the markets. Why we're talking about this? Why this is important? This is important because it will make the strong impact of the forecasts of the economy recovery, global economy, on the inflation, and it will change the sentiment of the consumers, of the people. As you remember, the 2 major driving factors for the gold currently are the liquidity, providing of the stimulus, and real interest rates. Real interest rates is the longer driving factor, and with the starting effect of the vaccination, we expect the boost in the consumption because currently people hold more than the 2.5 trillions on their hands, saving this money because they are worried for the future. It's people losing the job, losing the income. They need some insurance. They need some safety, so the people just sit on this money, and when the situation will become better, they start to spend them. It means that the inflation could be boosted closer to the end of 2021. That's what will have negative impact on the gold. Interest rate will start to rise, while the inflation and the activity of the Fed will will be lagging behind the interest rates. And that will lead to increase of the real rates, and that will make, in turn, the pressure on the gold price. That's why we think that within the nearest 5-6 months, gold will have the moderately positive sentiment on the background of the stimulus pack that will be provided, on the background of the impact of the virus that will slow down the economy and will hold the inflation on the lower levels. And that should support the positive action on the gold. At the same time, we do not expect some really explosive action above the 2,100 level. So it will be some upward action, but somewhere to the previous top, not too significantly above it or even slightly below it. That's our central view on the gold. You could read the details in our report, so there we explain this with more details. Also, guys, in the recent news, you probably see this. It's more and more information appears about the Donald Trump attempt to contest the results. And it seems that, his chances looks a bit better than it was just after the election day. Now, more and more in mass media and in the headlines, you could see that, it's more information, more discussion about this. And who knows, maybe it could change something. And we have to consider this risk factor because it could make the strong impact on the gold price in the short term. If somehow, indeed, Donald Trump will become the president, market will have to reassess the previously priced in amount of the stimulus, and that could lead to the short-term downside action on the gold. That led us think that we have actually two ultimate scenarios. First scenario, if Biden will provide significantly higher stimulus pack, more than the $3 trillion, that could push gold significantly higher and could complete our monthly target. So we discussed this in the monthly chart. Conversely, the victory of Donald Trump could depress gold fast because it will be absolutely surprising action and could lead to drop of the gold somewhere to the 17 even area where stand the monthly support. All other events stand in a central scenario if Biden will become the president and if he'll provide some stimulus. That's already announced and mostly priced in gold, will just drift higher. It will recover, I suppose, from the impact of the announcement of the Pfizer vaccine because, everything stands in reality not as impressive as it was announced. So this is actually a minor update, minor detail, because number of doses, as I said, will be very small and it's very specific conditions to store the vaccine. It's minus 70 degrees. It makes it difficult for transportation, and in general, hardly it will be applied outside of the United States. That leads gradually to recovery of the gold, I suppose. From that standpoint, on the technical side of our analysis, we're still following our central scenario as we think that it's more common. Although personally, guys, I think that something stands behind the current situation with Donald Trump, and I'm feeling that this is not the end yet. So I think that we still will hear something really outstanding. But let's focus on the central scenario. From that standpoint, I would be absolutely happy if we will get some minor technical continuation here following this initial drop, and we are getting the wash and rinse of these lows. So market grab the stops below 1850, hit 1836. It's preferable if it will hit the OP target, and then show fast recovery. That will be absolutely perfect. That would let us to take the position in the medium term for a few months. Maybe this market will start drift slightly higher, gradually higher, on the background of the Biden's victory in providing the stimulus. That's the perfect scenario that we intend to follow. Currently, we do not see any signs that it can't happen. Because after the sell-off, yes, we see some rebound on the gold, but it stands not very fast. Market doesn't show the fast recovery. It still stands near some resistance, shows gradual action, which means that still will minor continuation we still could get, especially because we have solid momentum here on the sell-off. That's why let's keep going with our scenario that we discussed last week. In fact, on last week, we've got the very accurate execution of the two-step analysis that we suggested. If you remember, in the beginning of the week, we started with this drop that was a reversal candle. We said it should get some continuation. Also, this was a grabber. Once we will get it, we suggest some pullback because here's previous momentum also stands not very weak. And as you can see, it's perfectly has been completed. Market hits OP target on Friday. So this agreement resistance is done. It's completed. As those of you who have taken the short position already, you could just move stops to the break even and see what will happen. Others, if you do not have the short position, we have to keep an eye what will happen in this area. So because if this is really a reversal and downside continuation, in fact we have the catalyst to sell. Market should form something bearish here, some bearish reversal pattern, something with the turn that will trigger the reversal down. At the same time, we can't exclude that 222 pattern could be a bit more extended. It could be right to the XOP 1922. So if we will not see anything bearish here, market starts to breaking up this trend line, breaking up this level, moving to the XOP, that will be the next level where theoretically downward action could happen. But from the 1922 area, it's very difficult to count that market will drop back to this level. It's something outstanding should happen, that market just collapse for $100 per contract. So it will be too much. And from that standpoint, if reaction starts from here, we probably will just trying to catch some technical pullback, technical retracement of the most recent projection. Because after that, market could reestablish that projection here. So it's a bit two different scenarios with the different extensions. So from that level, it is still possible drop below these lows, taking out of these lows and reaching the 1836. But from the 1922, it's will be too extended, and here we also will be watching for pullback. But in this case, probably to some support area, not to new lows on the daily chart. That's actually what we intend to do with the gold market on the coming week.